four things NVIDIA management isn't telling investors. NVIDIA scored 100 out of 100 on my methodology's operational scan. 3 of 4 AI lenses said hold, one lens, the Storyteller, said sell. The Storyteller listed those four things. The methodology is Occam's forensic jury. In the next 6 minutes, I'll walk you through those four absences, why the methodology refused to call buy despite the score, and how to read a hold-with-dissent verdict as a research input. NVIDIA is the largest single name in the AI infrastructure trade. Today's price of $213.20 at noon Eastern, with a market cap of $5.2 trillion, the workflow snapshot price was $215.33 at the May 22nd close, less than 1% drift over 3 trading sessions. The methodology ran on trailing 12-month data pre-Q1 fiscal 27. The workflow timestamp was May 23rd at 15:16 UTC. The data aggregator had not yet ingested the May 20 quarterly print. Q1 fiscal 2027 was extraordinary. Revenues of $81.6 billion, up 85% year over year, an incremental $80 billion buyback, authorization of a 25-fold dividend increase from 1 cent to 25 cents per reads on the public record. The methodology output is the pre-Q1 trailing 12-month read. The post-Q1 SEC primary source data is captured separately in the dossier, verifiable against the Edgar filing link there. The headline verdict is hold at medium confidence, no flagged override fired. This is the methodology's consensus with dissent path. The auditor is Claude. It reads the financial statements. The verdict is hold at low confidence. The auditor's DCF on NVIDIA lands at $104.15 per share. An independent third-party DCF using different growth, discount, and terminal assumptions lands at $250.61 per share. Two reasonable DCFs disagree by 58.4% on what the stock is worth. That's the largest deviation on recent methodology run history. Verbatim from the auditor lens, NVIDIA, the business, is a financial marvel. NVIDIA, the stock, at $215.33 requires belief, not facts in the data. The gap drivers are visible in the assumption set. The auditor's DCF uses a weighted average cost of capital of 14.64% with a beta of 2.244. That is punishing for a dominant player with near zero net debt. The terminal growth assumption is 3%. The 5-year forward growth assumption is 25%, which is itself a deceleration from the trailing 65.5%. The auditor's verdict caps at hold at low confidence. It refuses a strong sell when the same class cross-check disagrees that materially. It refuses a buy at 107% above the conservative intrinsic value. The architect is OpenAI. It reads management's disclosure language. Its verdict is hold at medium confidence. The disclosures are polished. The architect pulls two clusters of signals from how management is communicating. The first cluster, tone and forward guide precision. Management is confident throughout. No hedging language about cycle peak. No caveats about competitive intensity. The Q2 fiscal 27 guide is $91 billion plus or minus 2%. That precision on a $5 trillion company in a sector that has surprised in both directions recently projects high conviction. The methodology cannot verify whether that conviction is earned from disclosure language alone. The second cluster, capital return choice. An $80 billion incremental buyback plus a 25-fold dividend increase reads as either operational confidence or as a tacit signal that management has fewer high-return reinvestment paths than the bullish DCF assumes. The methodology cannot reconcile those interpretations from current disclosure. The architect's verdict, polished disclosures that signal confidence. The methodology cannot verify. Hold at medium. Now, the storyteller, it is Gemini. It reads what's not in the narrative. The verdicts sell at medium confidence. This is the lens that dissented. The storyteller surfaced 4 absences in NVIDIA's disclosure. Absence 1, no historical context for the elite metrics. NVIDIA scored 100 out of 100 on the Occam score, rule of 40 of 113. The methodology asks for trajectory. Where did these scores start? Where did they bend? Companies don't typically narrate their own evolution against external methodology scores, so this is an asymmetric risk. But for a stock whose intrinsic valuation depends on extrapolating today's elite metrics, the asymmetry matters. The story is told only from the peak. Absence 2, there's no granular drivers for the sustained 25% growth at this revenue scale. Trailing 65% growth is real. The DCF needs 25% forward to hold. Which specific markets, products, and customers deliver that 25% from a $215 billion revenue base? The storytellers read future growth is painted with a broad, optimistic brush. Absence 3, no acknowledgment of the DCF-Chasm in management's forward language. 2 reasonable DSCS disagree by 58.4%. The same stock, management isn't responsible for external models, but management does have internal cash flow models that map their own forward assumptions to a valuation. They know what the assumptions reach to read $250 and what assumptions reach the bearish read at $104. The disclosure could preempt the gap by being explicit about which assumption set management itself believes. It doesn't. The storyteller calls this a deafening roar of conflicting perspectives, structurally unexplained. And then absence 4, no competitor name checks. AMD's MI300 Plus, Intel's custom silicon, Google's TPU, Amazon's Trainium, Microsoft's MAIA. A few years ago, NVIDIA's own disclosures discussed competitive pressures explicitly. Today, NVIDIA exists in a vacuum. The storytellers read supreme confidence bordering on complacency or a deliberate choice. The storyteller's verdict is sell at medium confidence. The lens is not saying that NVIDIA, the business, is broken. It's saying that the disclosure context has 4 specific gaps that the methodology cannot reconcile without more information. And we have the Sentinel. The Sentinel is perplexity. It reads everything outside the filing. Its verdict is hold at medium confidence. A fresh all-time intraday high of $222.30 per Perplexity's finance. eToro's consensus analyst target sits at $301.32 as captured by the Sentinel pass on May 23rd. No fresh external bearish catalyst is found. The Sentinels read, the market is pricing perfection. The external signal is momentum continuation, not a reset in intrinsic value. So the verdict is hold at medium confidence. The Sentinel doesn't override anyone. It joins the consensus at hold-with-dissent path. So 3 lenses said hold, 1 said sell. No flagged override fired. The merged verdict is hold at medium confidence. The storyteller's sell dissent rides on the public record as material lens level dissent, not as an override fire. The focus, the reason this video gave the storyteller the most time isn't the merge put the dissent at the front. The merge produced hold. The reason dissent gets the most time is dissent is the data that wouldn't survive a single DCF or a single analyst process. Preserving it is the point. If you hold NVIDIA and the methodology does not say sell, it services a stress test for any bull thesis. The thesis that AI capital spending stays multi-year secular, and that NVIDIA's pricing power holds against the TPU, Trainium, and MAIA, and AMD is not disproven by the methodology. But the methodology has surfaced 4 specific things that management has not disclosed. A bull thesis does not name a position in each of those 4 absences is a thesis with 4 open questions inside of it. if considering adding, the methodology cannot give you a discipline grade conviction to buy, the unbridged 58% DCF gap and 4 disclosure absences mean the methodology has not concluded the bull case is wrong. It has concluded that the data does not currently support conviction in either direction. Adding becomes a discretionary call, not a methodology supported call. This is a canonical case of magnificent business at a price the methodology won't ratify. So the full dossier is at insightful-agents.ai/research/NVIDIA-forensic-jury-May-2026. Every lens reads verbatim. Every primary source is cited. Occam's forensic jury does not pick sides between methodology and market. It preserves the disagreement and shows you the seam. The dissent stays on the record. The audit trail is the product. So again, I do not hold NVIDIA, and this is a research commentary, not an investment advice.